June 14th, 2019. My name is Alejandro Zambrano, Chief Market Strategist with ATFX in London. Let's begin. And let's begin with a good morning to you guys. And I hope you guys had a good week so far. I'm ready for the weekend as well. Of course, before doing that, maybe uh, trade a bit today. So we're gonna begin with the euro. And unfortunately, the euro is actually back into that wedge that had been keeping price trapped. And there are opportunities to buy the euro, but not necessarily against the dollar. That's really not the optimal sort of trade, just because the way things are stuck, or the way the market is stuck now, and just trading sideways for more than a year. But in the short term, even though we're back into the wedge, as long as you trade about 12, 18, then there's no real change. In fact, the outlook I'm sharing with you guys here is the same outlook I shared with you guys on Monday. This has been a whole week. The market is pretty much where we started, more or less. And there's no real change here to the outlook. You're still creating these higher and higher lows. We went up, went down. Obviously, we have this low here, but these lows are fragile, and that's why it's important as a trader to identify the important lows for the market. Because if you don't, you're gonna be stopped out randomly, and obviously we have not been stopped out randomly here because of that. Now here's the GBP versus the USD, and the things have changed slightly lately, as you know. And Labour Party was trying to push through, had a vote, or the Parliament had a vote about maybe legislating against no deal Brexit. That was obviously voted down, and then we have Boris Johnson that received a good amount of votes. Let's see if I can actually find it here. So according to BBC report, let me see if I can find it here. The results of the first ballots of Conservative MPs. So Boris Johnson apparently got 114 votes. Number two, Jeremy Hunt at 43 votes. And then it was literally distributed to Michael Gove at 37 votes. So you can see here that obviously things are going to change, as some people that will vote on these some people that, for example, that voted on Andrea Leadsom, she got like 11 votes. So people like that would make a decision. So things are going to change, obviously, but the way things are looking right now, it looks like Boris Johnson is going to be the next MP of the UK, and we know that he's perfectly fine with using the no deal as a bargaining chip, and I think he's going to use it. So that is sort of scaring people a bit, trading slightly lower potentially, especially as the market can't really trade much higher. Now, there's so many different scenarios here, but there's one scenario I think makes sense, and it's the same scenario I've been saying over the last few days. The reason why it hasn't changed is because the market hasn't changed. And you can see here that you have 127.64, and you have this high here and high here. This is last Friday's high. So it's not so difficult to guess that there's probably some stop loss orders just above this level here. And if we take that level out, you might get a bit of a squeeze. You might get just a 50, 60 pip or so, and then maybe trade all the way up to 129.33, and then we'll see. But up a bit, yeah. Here's the dollar versus the Japanese yen, and again, much like this market hasn't really changed too much. I wanted to be bearish from higher levels, especially with stock markets moving up so aggressively. But this market didn't really go all the way up, and I've been saying it before, and I still think it makes perfect sense, and that is that if we have a situation where we have lower stock markets, then the yen should gain, especially if the Federal Reserve is going to cut rates. And I did do a video about the rate meeting, and that's going to be next week. And if you check out the ATFX YouTube page, you can see this is the video. I'll talk about some of the evidence, and not evidence, but reasons why I think the Federal Reserve can be bearish. Now, I don't think they're going to cut next week, and there is a 25% likelihood priced in that they will cut. So you might see a bit of a dollar weakness, because I don't necessarily think they're going to, dollar strength actually, because I don't necessarily think they're going to cut. However, I think what they will do is that they're gonna signal that the meeting in July they're gonna cut, because the likelihood of a cut there is almost, I think it's about 80% or so. So with that in mind, maybe we'll trade much lower. And here's the dollar yen, and this is a daily chart. Now there is a pattern which is called the failed head and shoulders pattern, and it's just made up of a normal head and shoulders. You got yourself the inverse one, which is you got yourself your head, your left, and your right shoulder, and the difference here, that would normally have been your profit target. So when prices are going upwards there, it made perfect sense to sort of, if we would have broken down, would have made perfect sense to trade that head and shoulders. Now you have the failed head and shoulders, which unfortunately is not as a good quality as the normal one, but the idea here is that when we trade below the right shoulder, which is 107.54, then you're gonna get the same difference here. The only challenge is, again, it's not really high quality. It's a good, okay pair, but I don't necessarily trade them, but I use them to understand sort of how far we can go. So that's what I'm looking at, and I think we could potentially trade much lower. And we did not go all the way up, but we don't always have to do that. I think if we take out something like 107.54, I think that could potentially be enough. So it's either that bearish break, alternatively it swings up and people short from higher levels. These are gold prices, and it's time to get excited about gold prices, because gold prices here on the weekly has this massive, some people interpreted this as massive head and shoulders with a big head, and I guess this being sort of the left shoulder and then a double right shoulder. That's perfectly fine. You can also interpret just this little section like an ascending triangle, and really if we start to trade much higher than 1376, then that would be that breakout that people have been looking for, and that could be a significant rally here of 16%. Now the markets are really quiet, right? However, eventually it's just gonna go crazy, the markets. That's just the way it is. It could be gold, could be Bitcoin, could be stock markets. They're different things at every year. And obviously, gold is trading sideways, S&P is trading sideways, EURUSD is trading sideways. So eventually something is gonna break, and this could be it, maybe. Now, to trade this one today, because I will still wait for 13.76, but to trade this today, I think the preference for me at least is to not necessarily enter where we are, rather look for a bit of a pullback. That's what I would look for. And if we take a fib from the low to your high, you get these different levels here. So we have a little pullback, pretty much level between the first fib and the 50% correction pullback level, so first and second fib. Then I will look for the market to bottom out there and then head upwards again. So that's what we can do in the short term. Now, next market is crude oil. Now, crude oil had a bit of a jump yesterday because one, I think it is. I think it was Norwegian vessel was attacked outside of in the Middle East, and apparently in water, in Iranian water, as I understand it. I only read the headlines. Key point is this: yesterday evening, Pompeo from the U.S. government said there was, as I understand it, again, I didn't actually watch the interview or the presentation, but reading the headlines, they're literally saying it was people from Iran that did the attack. So that caused the market to bounce to the upside. And so far, the market hasn't really been able to trade much higher. But if things go a little bit crazy and things escalate there, then it's not that unsurprising if we can see this market trade much higher. But for now, it's a bearish market, and I think if I would trade this, I would wait for the break to the downside here, especially in the light of what's going on in the Middle East. Now, this is the S&P 500. Now, S&P 500 is just trading sideways, and it's a very difficult market right now because there's not a strong trend. As you know, we capped by these highs, and there's not too much to do. People sold here in April, people sold here in September, So maybe they're gonna sell here again in June. Maybe it'll go a little bit higher, but eventually we're relatively close to this level here. So I would guess that people will try to sell somewhere up here. Now, already a few days ago, I said if we take out these levels, it's probably a good time to turn bearish. However, that break happened at 3 a.m. London time. Nobody trades at that time because it's very late in the US, and it is nobody trading in Europe. Of course, people trade in places like Asia, but a lot of people, especially when it's down with American stock markets, they wait for the actual wait for when volume kicks in. So I would not have traded that level. But that level now is a key point. And what you can do here is that you can probably box price in here and sort of see this as a short-term little range. You know, the market has been going upwards, so there's probably some people here that bought down here and they're quite keen on getting out, especially if trade below 2868. So this is the level you want to look at. Now, because the overall market is a bit choppy, I wouldn't get too excited here, but we could potentially scalp maybe from this level down here, all the way down here, and then we'll see what happens. Obviously, in the longer run, with US data being bad, the Federal Reserve cutting interest rates and everything, I still think we could potentially trade all the way down. I think we could trade back to December levels. In fact, I think we're going to be within this range for longer periods of time. But we just need to be clever about it, right? This is a range, and we can trade range. It's perfectly fine. But maybe the better way of expressing or the better way of trading the idea that we're going to have significant economic slowdown in the US and market turmoil would of course to be gold, because here, as I said before, when and if we take out this level up here at 1376, then you need to go, there are some highs here, but obviously you need to go back all the way up here. That will be sort of your next major high. So when you take out a level like that, it goes up. So it's a bit like, as I said just a few days ago, either we're within this room, just see this is like a wall, and these are like gates or like a door. So when you go in that place, you leave this room behind. So you can't actually see what's going on. You can't walk through the walls unless you're some superhero or the Terminator. So you won't go back into the range. Instead, what happens, you go up and then you get stuck in the new range. So the question is here, so if this is that wall, or that resistance level, so where's the next level then? Well, it's up here, right? There are obviously some few levels in between here, but the next major level is up here, because that's that swing high. So break up and down and then potentially upwards. So this is something that's sort of a preferred way of looking at it. And actually, I'm gonna take a look at copper right now. Copper should technically be trading lower and not higher. There should be a discrepancy between copper and gold, because if it's a genuine sort of risk of a recession that we're working with, and you can see here that we're dealing with, on the weekly chart, a massive head and shoulder in prices of copper, and you know, a break to 256 would be a good indication just to turn bearish on stock markets in general, and potentially lower. But there should be a discrepancy here. This should not be really as strong, which is not, which is good. Let's take a look now at the German DAX. The German DAX is trading slightly lower today, and as I've been saying before, you know, it's a bit of a difficult market right now, so I wouldn't get too heavily invested here or do too much. But it looks a bit, you know, could potentially create that inverse hand and shoulders. You know, not everything is going down, and in fact, stock markets in the US have not necessarily traded significantly lower. It could be that gold is just gaining because of dollar weakness, right? So here, you have potentially a left shoulder, and then maybe we'll create that right shoulder. And then when and if, because it's a big if we take out that level, I think at that point it could be good to turn bullish again. So this could be an alternative to the bad news story. And what I like to do is I just look at all the different markets, look at currencies, commodities, stock markets across the world, interest rates, and then try to see, obviously read the news, and try to see, you know, okay, if just one market moves higher, German DAX and everything else doesn't move higher, then maybe you don't have a good case. If gold prices are rising as well, maybe you don't have a good case, or you need to understand why gold is actually going upwards. But that's one way of looking at it and sort of working with this. Okay, so I think we're pretty much done with the main part of the presentation. Let's see here if you guys have any questions. As well, if you're just watching, don't forget to say hello. And don't forget to like. 8 people watching, 1 like. I guess I'm not doing a good job today. Don't forget to click on the like button before you leave. So question, what's my rate of return this year? I'm struggling to reach my targets. I am also struggling to reach my targets. Hi. I am actually doing very poorly this year. Not very poorly. Like on average over the last few years, that may be like a 30% return. But this year I'm actually down with 11 right now. So these are my results. Now, past performance is no indication of future results, and this is just the way I traded on my personal account. So just because I get this result doesn't, or I had this result doesn't necessarily mean that you and I get these results. I need to say all of that. And also I'm not a regulated money manager or anything. This is just the way I trade. And last year, some decent results on the back of stock market indices. Here in 2017, by the end I was trading cryptos, that did a lot. Here is the year when I was trading very short term and did not do me any good. And here was when the euro dollar was going straight down. That was really easy. And I think in 2015 as well, I think it was 2015 that I traded some Chinese stock indices. So and a bunch of other stuff. In fact, I trade forex, I trade commodities, and I trade forex, stock indices, commodities, and cryptos. Not too much cryptos anymore, but those are the 3 things I trade. As well, this is a nice little mixture of commodities as well. I'm quite good with crude oil, gold, and copper, and things like that. But forex is here. It's been sort of killing me because I trade with a breakout system, right? So the market trades sideways, and I identify these little ranges, and then I go long here, and then I put a very tight stop loss. So if the market pulls back into the range, I get stopped out. That's how I get some really good, decent risk reward ratios. However, this year I'm down with about 11%, and yeah, 11%. But I can't really. It's just half through. It's just half through the year now. Just need some good, decent trends, and if it could be gold, maybe that could help. But right now, I'm actually haven't traded for the last week, just because I'm a little bit like that guy over here, a little bit upset. Well, not upset, but the market is not moving, so my results are gonna suffer as part of that. Okay, I think we're gonna wrap things up. Guys, if you have any question, let me know. That's my, I have a WhatsApp group. You can just send message here, and you can also follow me on Twitter as well. We actually have a new and very interesting project for ATFX. Let's see if I can find it. I am not, yes, I am logged in. So this is something that's gonna go live. Hopefully it's already like on the portal, but it's not visible to everyone. So this is the way the portal looks like if you have an account with ATFX. Now with ATFX, they have this research and education tabs. You get things like Trading Central. They have very nice tools here. You get the quarterly market outlooks, but this is the cool thing. It's the ATFX Premium Trading Course. So this is just for clients, and it's literally, I think, a 3.5-4 hours of content, and it covers some of the basics, like not what's a pip, but some of the basic of trading, and it also gives you two complete strategies. The first one is identifying a trend and trading it. That gives you like a basic strategy that's that what's a trend. Trend's been around for like hundreds of years, so that helps a lot with that. And then we have my latest strategy, which is this one. When I trade with classic chart patterns, I don't necessarily trade them though the way you would read them in a normal book. So, and then we have advanced money management techniques, where I use a special calculator to calculate how much to bet per trade, because a lot of people just fail because they trade too big. Because you see, all trading accounts will experience some sort of volatility because of the market and because of the trader. So the market might actually do like that, right? So if you trade, oh no, your accounts are going to do like that. But if you trade too aggressively, if you trade with literally all your money on one bet, then of course, if you get the first order right, you're going to get all the way up, right? And then if you trade the next position and you put all the money at stake, you literally go back like that. So it becomes something like this instead of something like that. And these little sections here, these are called the drawdowns. And there's a lot of question marks, sort of how much should you be betting really per trade. Now, in this advanced money management techniques, I use a new tool that simulates the results. So we'll look at different so percentage wins versus residual ratios, and then the computer would simulate to let you know what the likelihood is. So what it does is that it will calculate over thousands of trades and see what is the likelihood that this drawdown reaches a certain percentage. In the example, I used 50%. And we do stuff like that. So this is, again, is for free. Doesn't matter which sort of account you have with ATFX. Now, if you are interested in ATFX, the normal account is not really very, very good because of the spreads, but they do have what we call under trading, and then you got the retail edge account. The retail edge account gives you same sort of spreads you would find for some of the big brokers, but you need to put 25,000 pounds with them. That's the sort of spreads you get here, which is very, very tight on the majors, very, very tight on the forex miners, and as well on the exotics. Because a lot of the different brokers, they give you the tight on the majors. So when you ask, they're like, oh yes, we're very, very tight. But then when you trade other stuff, which you probably will be doing this year, then you pay much more. For example, EURUSD is not going anywhere, and it's probably not going to go anywhere. So this year, if we do have market turmoil, I think it's going to be the yen that's going to be the winner. So obviously, if you trade Aussie dollar yen with ATFX, then the minimum spread starts at 0.9, so maybe it'll be a 1. But with other brokers, it's going to be a 0.3, 0.4, maybe even higher, just because people don't trade these too often. So that's what they do really good. And this is called the edge account. So with the edge account, you get those good spreads. You get that course. We also do one-to-one coaching for anybody that opens up the standard edge account. So check that out if you want to. Let's go to ATFX. I'll send this to you right now via the chat. I need to go to the YouTube account or YouTube. So that's the link for that. We got Antonio as well in chat box. Good morning to you, sir. Thanks so much for joining us. This is what you need to do. Click on that thing. Okay, I think we're gonna wrap things up. If you guys have any questions, just ping me. You got that WhatsApp number. You also have the link here to the ATFX page, and as well, you can also reach out to me via Twitter. I know most of you guys have it, and then as well by email. You have alejandro.zambrano@atfx.com as well. So that's the second way you can reach out to me, a third way really. Okay, guys, I want to thank you so much for joining me this morning. I hope you guys have a brilliant day and a brilliant weekend. And I'll see you guys on Monday. Thank you so much. Bye-bye.